Great and beautiful morning and evening to you all, wherever you are joining me at this hour. Welcome to 359 edition of Investdata Trading Academy Live with Ambrose. I would say that the market is still very much missed. This morning opening, another full trading week on a missed trend. We're seeing that most of the market are quiet, and I will tell you that extension of last week missed sentiment, and also because of the escalating Middle East war or conflict, you see that it's selling on the market already. Also, at the same time, we're seeing that the higher yields in the Western market have also put pressure on equity space. As we speak now, despite we're seeing a missed earnings that are coming from this market, we're seeing that their stocks, the market is also looking what in the southward direction. I will tell you that most of the stocks market across the world are missed, and why majority of them are in red. That's why I said missed. That means no, we're seeing more in red than those that are trying to stay flat as we speak. Yes, we can see that the financial market remain a bit quiet and flat right away now to speak now. But I'll tell you, because of also expectation of more macroeconomic data from different environments, I also have kept the market in this mood this morning. But the good thing that investors in different markets are also interpreting what is happening within the environment so that it will guide them to make what informed decision. Despite that the global economy is not looking too friendly because of what increasing geopolitical tension that's already militating on this global economy. On that, this is what's also driving the market this morning. As I've said earlier, most of the investors are staying on what we call on the sideline ahead of what key macroeconomic data to be released later today or early tomorrow. We expect that Germany is also release their publish their report on what on the production activity. Also, European Commission also be releasing what we call a consumer confidence data for the month of October. Fed also, Federal Reserve of Bank of Chicago is also to release the what called National Activities Index. These are the things also expected to also drive activities. We expect that yes, there are also some policy meeting that's going on between now and tomorrow from Canada and ECB. We expect also wide out of Japan will be within towards the 30th, 31st of this month. Although that these are the last for this year for this couple. Why all eyes are still on Fed meeting in the first week of November, being the last for also for 2023. These are the things that are going to shape the market as we speak. But I will tell you, even the earnings that are coming, if not that earnings are a bit good or less impressive, I'll tell you that I would have seen worse than it. But I believe that those people are also revaluing stocks or the companies now as well, because we are seeing that yield across the globe are also hitting a roof of almost 5% and above as we speak now. That also call for concern, and that's why I see most of these policy makers, especially emerging policy, all are likely to put what hold. Why is it? Because already, if you are seeing high TCP yield and bond yield in this market, automatically cost of fund is already on the high cost on the high side. Adjusting rate again will be April. That's why all eyes that they are expecting to see the kind of hold in most of the rates that policy meetings that are going on today, tomorrow, and that of coming. But it depends on also more data we're going to see. Like I told you earlier that we're expecting to see some more figure. But don't forget that in the last week on Thursday there was no class. But don't forget that the body language also of the Fed chairman from his statement shows that they are likely also they are in between either adjusting or the hold. But I believe that because of the high yield in that market, and which also affecting stock already. Don't forget that when there's high yield, for particular flow of funds, when we are seeing high yield, the amount of people want to take their money to go where there's risk people for. It depends also the what inflation in that environment. But right now, I believe that is why we are seeing a mismarket. But what is happening in Middle East have not given a clear direction where they are going. Whether it's going to escalate more than this, we're also seeing the oil price in the international market oscillating up and down. As we speak now, let's say the losses that I recorded early is easy enough again this hour. But I tell you, this is what's going to drive even commodity price apart from the oil, other commodity. We're also seeing that gold price and others are also in that direction going up and down. But I'll tell you that as all eyes are still on the major earnings for this week, I believe that those earnings, once they break out, expectation as we have seen so far, I want to see those individual stock or the sectors where they are coming from are likely to experience what an uptrend in that regard. And that is how investors should also be guiding their investment decision right away as we speak. In Asia this morning, we're seeing that Asia market has opened in that direction, also hitting 7 months low in terms of what the market, and why as a result of what treasury yield also is a major concern that is going up, and even in the midst of especially of tech result also to come to give direction. But I tell you, because of this high yield environment we are seeing, 10 years yield hitting almost 50, like I tell you, 5% above. It's also threatening that market. And what is happening in the Middle East and earnings that are coming from the tech company, yes, they are good, but they are missed, and that also is what's also putting pressure in that market to hit another 7 months low again. And if you look at, like I said, look at other market in that region, also still oscillating up and down. We're seeing Australia and all those around them. China also in that direction, but I believe that Europe market also is opening also in that direction. Why that of US? We're seeing that US is now are open in the downward already. We're seeing most of these store indices in US in the red already, and that's a result of what this fear of rate hitting this high, and also we expect that the outcome of the policy meeting, which is also what investors are expecting, and more data to give direction. These are the things that will shape the market. I've said earlier. For me, there's no cause for alarm, but rather you as investor here or anywhere you are in the world, you need to look at exactly what is predominantly happening in the environment to guide you which sector or industry. That's why I said if you remember that volatility will continue, especially as we're entering the last lap of the world of the earnings season, because I tell you this week and next week we'll see more numbers in the market. Like this morning, many companies have notified their release of their results according to the release date that we have seen in mature market. I mean, we expect to see more tech companies, even the financial and other industry releasing a result today. That also influence the market despite what is happening in the Middle East and lot of Russia. But I'll tell you that the risk in the market now is high because of what is happening. But I believe that as evaluation also going in place as a lot of what they are seeing in physical market, that also guide us here way back here in Nigeria. You know that in West and Africa market it still means why this morning we saw our market here opening in the up and down direction. We saw the market has opened red today. It turned green as we speak now. We want to see also before the class what the market will be doing. But I'll tell you that this up and down in the market is a result of what profit taking and also expectation of more result. We have seen no impressive number coming from companies that are released so far, but market have not reacted to this. Want to see more. We saw the result of UCAP looking good. Yes, despite what I say is a flat number. I think that number is a good one considering what is happening in the economy. We saw the one that surprised me, the one that came from Unilever. Unilever, I think that the third quarter result was a bit for the quarter was a bit you can see some losses, but not as much as expected because of what is happening in the FS market. You can see that stability of is returning. That's a business model of the company matters. Even in this environment where we're seeing that most companies are affected with this FX issue, we're seeing that the Unilever numbers is not looking bad for the 9 months. I can see kind of a turnaround from a negative position to what a positive position for Unilever. When we come to that number, we'll also be looking at it critically. But I think this is what investors should also be looking at this point. That yes, after expecting numbers to hit market in Nigeria here, how will we position our portfolio to make sure that we are in the right stock, that when the result hit the market or the company result, it meets me, you and I in that stock with positive number that also support our price in the up direction. That I tell you, every investment they get in the future, and investor want their position to be favored with a number, because when we are in anything like this, you see a lot of activities, volatility, inflow of funds, increased momentum. Also, you can see disappointment and also surprising numbers. These are what will drive the volatility. But I tell you, this volatility or the sentiment we are seeing that will provide that liquidity you need. Earnings alone will not drive. It's the liquidity that comes with the earnings, because the sentiment of the people that provide that liquidity in the market. On that, you need to look at what is the market doing and where the market is going. Once you're able to arrive at that, it gives you a lot of confidence and direction what to do in that regard. That is why, as a trader investor, you need to position before the company numbers start hitting the market. That is the best way to invest. You don't wait to see the number before you jump in. You need to be in position so that when the number comes, it meets you in that stock. Once it meets that stock, that is where you can say that yes, you have made a wide investment decision. But if you are waiting to see the number, unless you are a long-term investor, you want to accumulate. That's why I always say that the institutional investor, they don't rush the way retail investor you and I do. Because when result is released, they take time to analyze the result and look at what's happening in the sector and make projection where the sector is going, and that will influence the company performance. That you will see them also buying more at that particular time. That is what you also will be doing as investor. That you know at least result and start projection before also the smart one, because they don't want to provide liquidity that will put the price of that stock. But I tell you, in our own market down here, think there's no cause for alarm at all, because we are seeing a positive scenario playing out in the mature market and our market. In mature market, we are seeing that yield in that market are hitting a roof. While here, we are seeing that the yield in our own market, especially the treasury bill and bonds, have been on a decline, while the bonds is almost stable and inflation is on the high rise. And also, we are seeing also is rising. So let me put that. And also, we are seeing that the treasury bill has declined from 12.something to around 9.25 now to speak. Both also other 182 days and 91 days all have witnessed decline in the last option. And also, if you look at the budget space, or we'll call it between 2024 to 2026, the scheme that they've approved. I think that the government is already looking the way of what reducing interest rate to drive the economy, because it depends on what the government want to achieve. If you want to squeeze your economy out of space, fine. Because if you have high interest rate, your economic activities will cost of funds, that employment will be on high, especially now that we're seeing that the monetary policy is struggling with their policies up and down, no policy somersault, and also no bringing no preparation, no interpretation, no this adjustment. These are things that I will tell you that there's still controversy on the 43 items that were that kind of the ban was lifted. You can see that how our naira the kind of the value or in recent weeks from above almost 1,000, almost 1,100 naira to speak now. That is not good for me. That means even foreign investors will not be jumping, because they don't know how far this currency is going to, because there is no clear direction what the monetary policy or the fiscal authority are doing to make sure that we stabilize naira, and also to drive our economy. Because I tell you, as imported economy, or depending on foreign investment, very imported goods, we cannot control our currency to go into world production, and can't go into production on a high interest rate. I think that is why we are seeing, in the scheme we are just released now, that for 2024 to 2026, if that we can see a good interest rate, and also that will empower the economy. And also, don't forget that globally there's clamor for what? For rate hike. If that rate hike, much likely inflation coming back in the mature market. That's why you and I are seeing that our market here was expressing opposite of what is happening in the mature market. We're seeing it here coming down. That means the only place you can hedge against inflation is still the equity space, but you need to also invest wisely by buying into those stocks that has good earnings that will support their price. I'll tell you, it is when price is going up and there's no earnings to support it, that price won't go far. It will start coming down. And that's why earnings season at this period is very, very key. Especially the numbers from each company or sector is key to tell you where you should also position your portfolio. For those that have been with us on different follow who have advised that this is time for you to put in your portfolio already in service sectors, and those companies that you know that their services are essential, that even when they adjust price up, there'll still be high demand that will support their good earnings, that at the end of the day they can post good dividend that will support their price, and good earnings that support their price. This is how to go about investment at this time, especially as all eyes are what on the numbers that we expect to start hitting the market. Today we have seen early filers, and I believe that between now and end of next week we'll see more or inflows of earnings that will come. As it come, market will also be digesting it and also be digesting. I expect to see a mixed market in between now and end of the month, up and down. Market can gain today and lose the next day, but if market is gaining and lose next day, you need to stay in your position and watch. That's not the time to be jumping in and out, but watch your position and also let your trading plan guide you. You know why you are in stock and how also to take profit in that particular stock. There's no cause for alarm in the market. All we just need to you must invest wisely as well, with confidence, and that is how you can make good money from the market. But when you are guessing, you are bound to run into error, and also that will affect your portfolio. You must do this investing with confidence and hold on to your investment objective, and also let your plan or your investing plan or trading plan also guide you at any given time for you to stay ahead of the market. This is the right thing to do in any market. Whether you are investing in a foreign market or if you are investing in any other instrument, you must understand what is the sentiment, and sentiment also that will provide liquidity. We have seen that when we come to the chart, we will now see where the money flow going. Is it going up or down? We'll see. But on the weekly chart, you can see that the market remain also within a consolidation level. Even as we look at the daily chart, the same level, but we're seeing a pullback for almost like 2-3 days, in last week. But I believe that the market is still very, very strong within that consolidation range. Once you break it out down or up, that's where a new trend will also commence. That's why you must keep your eyes in the market to know exactly what is happening. And I believe that because we understand our also economy and market, and like I always say that no matter how long you see that the market is connecting from the market from the economy, there's always a time to come back. And that's why I say if the government go with its plan to reduce interest rates and also be able to address this issue of FS that is also putting No, even the manufacturing sector in a tight corner. If we address it, I think we might see a turnaround, ahead, of the economy in 2024. If the government will have good plan and implement them between now and that first quarter of 2024, we might see the economy, finding its good what we have to speak now. We have not seen a clear direction where we are going. But all others still expect to see what the ministers have, for their industries or their sectors where they are overseeing, to know their plans, and that's what also traders and also investor analysts to benchmark what they are doing and what they say they want to do in their plan. But when there's no plan, nothing to it to match to see are they making progress or not. That's why all eyes are on the central bank. We know that yes, February, let's say November will be the first FPC meeting of the new CBN, leadership. But what to see where are they going from there is very, very important also for us to know. But let's keep our finger crossed and see where the market will head to as we speak. But I tell you, when market is still at this acceleration level, making up and down movement, you need to wait to see the clear direction before you jump in. For those that are in profit, nothing stops you to take your profit, even at this level, even at expecting result. Take your profit and still wait to see if the number will come out to continue in that direction. Your profit is key. But when you are seeing your profit as paper profit, you are not taking it, you have not done anything until you take it out as cash, that's where you are making profit. But if you are seeing 100% in your portfolio, you are not taking it, before you know that same market that gives you 100% in that portfolio can take it back from you. That's why when you see profit, because you have a plan, you know when you also profit target and also execute that plan immediately. That is how to go about the market. Before we go to look at the market performance, look at the store earning that came. I told you about Unilever that released result. We saw that Unilever their 9 months result look a bit better compared to their third quarter. You can see the accumulation of first quarter and second quarter, the 9 months result is better. And if it is sustained, yes, we might not expect to see a good dividend at the end of the day. But if this figure is sustained, that will be better for investors in that company. It shows a light that there's at the end of the tunnel there will be light, because as we speak now, we're seeing that the revenue of the company moved from 64.77 billion to 81.58 billion for the period, and also translate to PAT of 1.69 billion against a negative position of 348.1 million naira. See, that is a good change, and it's a good move. They also translate to any per share or EPS of what 29 kobo against a negative of 6 kobo posted in the same period in 2022. But now, if you look at the company operating cash flow, which is very, very important, when you see a company earnings looking up, you need to know what is especially in this manufacturing sector that we're seeing this kind of high volatility in exchange rate, volatile market, in the FS market, and that it's also know that because they want to import goods, they want to import machinery, but because also most of these companies like Unilever that has market outside the shop of Nigeria are also likely to earn what in dollar outside Nigeria, which is the good thing of the new Africa region trade zone. If can take advantage of it also, but I think that these are things they are going to balance it. For me to see that they are putting about 1.67 billion against 348.1 million loss in 2022. It's an improvement. Let's see what the company is up to at the end of the year, but it's a good sign, and that also gives you an insight to what we're likely to see from those companies in that sector that has also a wider share market, the market share, sorry, that they can also sell outside Nigeria. We take advantage of the trade zone Africa period. That will be a plus for them. Like I was saying, that the operating cash flow for the period was up to 6.71 billion against 5.96 billion in 2020. For me, it's a good one. But the result that came from the insurance company will be the first one. But if you look at that number, I'll tell you that number for me is not too clear interpretation on their presentation. But I think that their margin, their current 2023 of September account with their December account. Yes, that might also for me. Yes, it shows that they've surpassed their performance as at the year 2022, but you need clarity on that. But we can see that for me, I've gone back to see that the gross the earn income from 2022 2022 moved from 274.4 million to 503.48 million. You can see this is a huge more than almost 100% growth. We are seeing almost 100% growth in the earn income. But look at the PAT also here, we are seeing an improvement, because we saw at 2022, we are seeing that they are having a negative 977.98 million. Today, or for 2023, 2023 September ended 31st, they moved to a positive of 249.93 million million naira. For me, it's a good one, and that's translates an EPS of what, of 5 kobo against 19 kobo, against of loss of 19 kobo, now a positive 5 kobo in 2023. Yeah, this number looks somehow, but I tell you, it gives an insight to what we should expect from what, from the insurance sector. If we are seeing that Royal Exchange at this point has also come back to this position with all their loss reported previously. It's a sign that more better numbers should come from that industry, knowing that the premium hike also adjustment or raise is also a plus for the industry as we speak since the beginning of the year 2023. These are the things we should look out for in the market. I believe that once the more results come to give market a clear direction, but like I said, at the end of the season, we expect to see a high volatile market. That because of what you might see miss sentiment. I also see momentum changing, inflow of fund, and also because of what positive numbers and disappointing number. You see them driving prices up and down. But I'll tell you, revaluation on this number also continue, and that also trigger the positioning of portfolio ahead of what, ahead of 2023 financial year ended December for most of the company. And you know that in our market today, about 84 to 85% of listed company has December as year end. That means we expect to see results of these companies their full year in the first quarter of 2023. I will tell you these numbers will give us insight what to expect, whether dividends should look up or down, all depends on what, on the numbers we are expecting to see within now and end of the month of October. But as we speak now, we come back to see what the market doing. As I said earlier, the market is going up and down. We saw that last week market pulled back below the 67,000 mark. To trade right now, to speak now, 6,909.25. Market is down marginally by minus 6.16 basic point, 0.001. The market is not here and there. Like I told you this morning, it has opened. Market is relatively quiet as we speak now. This flat market, we're also seeing a slight negative market. We're having 15 gainers against 16 losers right away as we speak in the market now. This is the state of the market right away as the market is ongoing right now. That means you as a trader or investor, you need to also know why you are in the market and allow the market flow also to guide your decision. You need to know all the what. I believe that what we're seeing in the market, is also tell you that all eyes are still what on the numbers as we speak now. That means you need to also hold your position to see exactly what is happening, what in the market, and watch where it's flowing to. That's why when we come and see where fund is going to, we get also to understand. If you look at I say we have 16 losers and 15 gainers. Right now, we're having the top losers in the market are V V V VFD group, the newly listed company that had about that listed around 244 is it's also down by 10% this hour, followed by the Champion Brewery. We're seeing MC Nico and the Omatech and the Prestige. These are the top losers right away in the market. But on the gainer chart, Thomas Wars has continued to dominate the market as we speak now. Because Thomas Wars has continued to dominate the market as we speak, we are seeing that the market is already in the up direction for Thomas Wars for now. For last week, we saw that same market for those stocks receiving in the up in the green. This week it has started also on the green note, which is very good for Thomas Wars. But once again, that we need to look at, we have to look at the academic press. That is the next one on the board. Academic press is on the board now as we speak, and also Regency Insurance is also on the line, followed by Cornerstone Insurance, and also me and Baker. These are the top 5 gainers and as we speak right away. But in terms of volume and say activities right now, we're looking at UBA sustaining 19 naira. Almost it has gone as 19 naira 20 kobo this spot. Right now it's been around a 19 naira flat, 17 between a 17.41 million shares traded so far in UBA. Access Bank also is doing 8.8. Access Bank is doing 8.23 million share. Sorry, Access Bank is doing 8.23 million share as we speak now. Champ is also 150 kobo, 6.67 million share. Cheap USC 116 kobo, 6.37 million share, and FCMB at 5 naira 95 kobo is doing 6.14 million shares. This is the test of activity. You can see that relatively volume is in the market. These are low volume we're seeing. But let's wait and see why you're seeing volume is wait and see attitude of what of market players. They're already taking position. They are seeing to see where the number going to flow to or where the market is going to move from here on the strength of the number, and also as far as I see there some positive catalyst from the monetary or fiscal authority or from regulators to make one policy statement. But I tell you now, the major focus is how earnings will support the market, and earnings alone doesn't provide liquidity. And earnings will drive to the market is what will drive the market up. And don't forget that the major market player that provide that high liquidity is what institutional investors, and put I tell you we also call them smart money. Once they are back to the market, you will see where the market is also will be heading to. But right away now we're back to our chart. You can see from our chart here that the market is still within taking the up here, the peak here. This is the recent peak we have seen. I'll say double top here. You can see it here before I put back. Also, you can see that this also is strong support level at this point. Even when it tested below it, it came down to this level again. Say that this is a flat number that we are seeing again. This flat number we are seeing is what will guide you to know if market is still at a support level or not. But right now, it's heading toward that support level. But I believe that before then, when I see what market is close today, but there you can see what the chart is telling you. Market has pulled back for 3 straight days now. 1, 2, 3. As we speak now, you are seeing it here. I believe that this is what our eyes should keep on now as investors or traders in the market, because this is what we are expected to do to know exactly what we are doing, and this is how to use your chart. And I tell you, we are seeing also higher highs before now. I seen higher lows. No, I tell you, this not lower lows, this higher lows. But to just see and see where the market is also will be going from here. For me, there's no cause for alarm, like I always say. And because we are saying no cause for alarm, it says that we are seeing something that is positive in the market. Let's quickly call our our indicators for the class today. And these few indicators is what we want to use so that we know that for time we don't cloud our chart. We want to take those that are important, that give us what we need or what to know, and also act with them immediately. Our T line is what that we don't play with. Our T line is what is 8 that we call a moving average exponential 8. You can see this the blue line you are seeing here. You can see it here already. You can see that money flow is looking down around the 59. It's still relatively strong. There's no cause for alarm. And MACD here, want to look at what the daily MACD is doing. Let's zoom to see what is the position of the market right away now. The position of the market, we need to look at it, what is happening there. You can see that the market has crossed below the T line, and that is that the momentum in the market is weak. You need to also watch that. I can see that money flow is looking down around 56. I can see also the blue line have crossed, slightly down again. The line, you can see it here. And you can see when this thing happened, when you can see that was a statement of what happened on Friday. You can see it here, as the market is on now. You can see the state of the market as we speak. I believe that investors should also not panic, but those that are taking what I call a position trading, it's opportunity for them. But those that are smart, especially those in our group that already positioned the market, you need to just wait and see what the earnings will do. And don't forget that you must keep your eyes on the market to see once the market go against you, your stop loss will also be there to guide you to know exactly what to do immediately. That's why you must look at your chart to know what is happening and also how to take action without procrastinating. It's very, very important. Yes, now that we have seen the market, we'll now look at different time frame. On 1 hour time frame, what the market doing? Market is below the T line on our can see it here. You can see that MACD is bearish and money flow is looking like it's only direct to make an uptrend. Because the money flow there that forms, it's not in the market on a 1 hour chart. So we look at the 4 hours chart before we completely look at what the 15-minute chart, which is the short one for the class. Look at it's likely that I think that let's look. I want to make sure that you see it very well. Look at this. I want us to zoom this 4 hour chart to see. 4 hour chart, you can see what we are seeing on 4 hour charts now. 4 hour tells us that the market is very clear, but we are seeing a strong, what we call a reversal, a bullish, a reversal candlestick we are seeing now. This is what we call a hammer. When you see market coming, I can tell you that the market is likely to turn up any moment from now. You can see it here. this is a good candle that you should look at, especially when you are seeing a down market. That's that tell us in the last 4 hours where the market is now. It's a sign that market trying to resist, decline. Came down here, it's up already here. For me, it's a good sign that if earnings move the way has been expected, we might see a turnaround in the market. These are the things also to also consider. Then finally we look at the 15-minute chart here so that we know exactly what to do. 15 minutes chart, you can see also on 15 minutes chart, I've seen that in the last 15 minutes we are seeing the momentum coming up. That's why most time when you see that the 3 time frame, the 1 hour, 15 minutes, and the 4 hour chart, in this chart I think direction, but when they are missed, you just wait to what to confirm. But on 15 minutes chart, we are seeing, which is the shortest time frame, we are seeing a sign that also the market is likely to look up. Looking at the green that we're seeing right away, you can see it for yourself. And why the 4 minutes, 4 hour chart is telling us that the world market is forming to resist a decline. For me, it's a good sign that we need to watch. Good minds, before the end of the day or tomorrow trading will confirm where the market is going from here. But for me, this means technical we're seeing is call for what? For you to carefully understand the market. And that's why you have to wait to confirm. That's why confirmation is very, very key. You want to confirm this green line that's already green here. Once it crosses the T line, it's already slightly below the T line, confirm with a good improved volume, and MACD is positive here. Money flow is looking up below at 37 or below 50. For me, let's keep our finger crossed for this is what I expect we should do here. Let's keep our finger crossed and wait to confirm this trade tomorrow. Because that money flow is also looking down on 4 hours. I don't know why, but still above 50, which is good. And with this formation I'm seeing here, it's a good sign that market tries to resist decline. I see that's coming down, but with this one I'm seeing here, if we open here, we might see an uptrend. It was a breakout the key line that will also confirm a new trend for the market. For me, let's keep our finger crossed and do not panic at all. Yes, look at those stocks that are the top gainers right away, and let's look at the volume. Let's start from UBA. UBA has been the toast of investors. Even when they mark down, they pay their money. You can see that investors are still holding that stock, even taking position more on it. It says that they are envisaging a lot of good things from this stock. In 4 hours chart, you can see that UBA has remained above the T line, which is a good sign for me. It's a good one. MACD is still very, very much positive as we speak right away. MACD is positive for MACD is positive for what? For UBA now. You can see that MACD is positive for UBA. For me, it's a good one. Lord. Let's keep our finger crossed for UBA. There's still potential for UBA as to speak. That's why you can see your 4 hours chart now. The way it is now, MACD is positive. Money flow is 75. For me, it's a good one for UBA. But quick look at what is happening in Access right away because of our time. Let's look at what is happening in Access. Access Corp does pay dividend. With this fund they paid going back to Access this morning, we need to know. Let the chart tell us what is happening in Access right away. Access for me, on also a 4 hour chart, you can confirm here. This is a good sign. Even though Access is below the T line, I can see that the stock also resisting the decline here. But we can also see that the MACD is coming to try to come down here. You can see where the blue one is. Once it crosses it, let's move up from here. Have a good one. And also, I see that money flow is also looking down below at 4 hours chart. Let's look at 1 hour chart for Access. Then because of our time, we're going to look at Dangote Sugar. Dangote Sugar, where is it going from here? We'll quickly come back to that. Dangote Sugar on 1 hour chart is still also below the T line. You can see it here. Okay, so slightly above the T line. But MACD is giving us a sign on 1 hour chart to look up. Money flow is still, for me, is low around the 32, but still looking up. Let's look at the 4 hour chart for Dangote Sugar of our chart. We're seeing a good formation here, try to resist the decline in the last football. MACD is confirming a bearish state, but money flow is looking up around the 86. For me, it's a good one, but let's keep our fingers crossed for the stock. Finally, like I was saying, let's quickly look at Transcorp because our time is fast spent. It's like the internet had a stock going up and down.